Hi traders, and welcome back to yet another new video from Trading. In today's video, I want to explain to you 3 ways in which you can trade correctly and successfully with breakouts. If you, as a trader, don't know exactly how to trade with price action yet, then I recommend you to watch this video carefully. As it happens, price action is one of the most used trading methods by professional traders. After watching this video, you'll know exactly how to do it on a professional level. Let's quickly start the video. Before you can act on breakouts, it is of course important that you know exactly what a breakout is. Simply put, a breakout is a change in a trend. For example, here on the screen we see a falling wedge pattern. The price movement in this pattern is downward, so the price is moving in a downtrend. But at a certain point, the price gets to a level that it is very close between a support level and resistance level. At that point, the price actually has to make a decision because one of the 2 lines it will have to break through since the price is trapped, so to speak. As soon as the price breaks out over or under one of these 2 lines, we can speak of a breakout. In this case, we see a breakout at the top, so over the resistance level. So we see a breakout taking place at the top, after which we can expect the price to also rise upwards. It's also possible that the price will break out at the bottom. Should this happen, we could anticipate a further price decline. A breakout does not necessarily have to take place as a pattern. It can also take place at a horizontal resistance level. Here we see an example of a horizontal resistance level. As you can see, the price tried several times to break through the red bar, but each time it got resistance and the sellers were stronger than the buyers. However, at a certain moment, the buyers still managed to bring the price over the horizontal resistance level, after which we can speak of a breakout. As soon as this breakout occurs, the price is expected to actually continue rising in that direction. In this case, the breakout thus takes place at the top, so that we can anticipate a rising price. Now that you know what a breakout exactly is, it's important that you remember that a breakout can take place on every trading pattern and on every horizontal resistance level or horizontal support level. There are many different trading patterns. I just showed you only the falling wedge and a horizontal resistance level, so you should know that the breakout can occur on any pattern. Since I'm not going to explain to you in this video all the patterns that exist, I'll just show you an overview of possible patterns that can appear on the price. Now that you know on which areas on the price a breakout can take place, we're going to look at the 3 ways how you then actually capitalize on a breakout. We'll take as an example this resistance breakout, but keep in mind that everything I'm explaining can also take place on the other patterns I just showed you. The first breakout we'll discuss is the breakout and retest. With this breakout, you don't immediately bet on a rising price once the breakout occurs. This is because we are waiting for a retest. A retest can take place after the breakout and actually means that the price touches the top of the resistance level after the breakout. We can see this here. The price first breaks over the resistance level and then first makes a small drop back to the resistance level, which now serves as support, and then rises over its last high. In this case, we can anticipate a rising price as soon as the last high is broken. The other way around with a breakout at the bottom of a pattern also works. Here we see an example of this. We see a normal trend line where the price breaks out at the bottom. We don't play right into a falling price yet, but we are still waiting for the retest. We see that the price rises back to the bottom of the trend line, which now serves as resistance. Then it drops below the low that the price has made, after which we can finally open our selling position. A retest actually shows in simple words that in this case the sellers win twice over the buyers. Initially, the sellers win by allowing the price to break out below the trend line. Then the buyers try one more time to bring the price back over the trend line, but they fail when the buyers get the price lower again by dropping below the low. So at this point, the sellers win twice over the buyers, resulting in a huge drop. During trading, it is actually always about trading with the side that is being traded on the most. That is, up or down. So by the retest and drop below the last low, we clearly see that the sellers are winning twice. So from that point on, we're capitalizing on a falling market and making a profit when the price drops. Many people think that as a trader they can only make money when the price is rising, but that is a wrong thought and they are missing out on a lot of profits. You can also make money when the market drops by using a technique called short trading. In other words, you open a selling position and you make a profit when the price drops. I myself do this on the platform Bybit, and it's just as simple as opening a buying position. I've put you a link below this video that allows you to take a look at Bybit. And please note, this video is not sponsored by Bybit. I personally have good experiences with the platform and trade on it daily, hence I recommend this platform to you. Now that you know how to anticipate a breakout by means of a retest, we can look at technique 2. It's always important to learn several techniques, as you will see that a breakout is not always accompanied by a retest. Sometimes, you will not see a retest at all, and in some cases the retest will not come back to the resistance or support. In techniques 2, I'm going to teach you that we can still take advantage of this breakout, but without a retest. This is the support breakout. What you do in this case is to draw a support level at the exact point of the breakout. This is because a lot of volume has been released here, which we can take advantage of at a later point in time. As you can see, the price later on found support exactly on this level, after which we could still take advantage of a price increase while the price didn't make a retest. So, you can open a buying position on this support level. There is one rule with this technique, and that is the rule that the support breakout can only take place at a trend line or a pattern breakout and not at a horizontal breakout. If you apply this technique to a horizontal breakout, then you will see that the exact spot of the breakout will always be the same spot as the retest. So if the price comes back here at the place of the breakout, it will automatically make a retest. So you can only perform this technique on patterns or trend lines since they are sloping or descending. For the third technique, called the volume breakout, we will use an indicator. This is the volume indicator with a moving average of 20. In some cases, you will see that the price does not make a retest and also does not come back at a later time at the place of the breakout. At that moment, a breakout occurs with a lot of volume and the price rises or falls in one piece. In this case, we can use the volume indicator. If we see significant volume after a breakout, we can immediately open a position without waiting for a retest or for the price to return to the support line of the breakout. Significant volume can be seen by looking at the volume bars of the indicator. Here we want to see the bars move over the 20 moving average after a breakout. This means that there is a lot of volume coming into the market during the breakout. We don't need to wait at this point for additional confirmations, such as a retest or a support level, as you learned in technique 1 and 2, but can open a position immediately. So exactly at the time of the breakout, we want to see the volume bars rise over the 20 moving average. So at that moment, we open a buying position. In a falling market with a breakout at the bottom, this works exactly the same, only the bars are colored red. In this video, you've learned 3 techniques which you can immediately apply while trading. These 3 breakout techniques are extremely accurate, and that's why they are also applied by professionals. I recommend you to memorize these techniques well, because breakouts happen every day. Whether it's in the cryptocurrency market or the forex market, you can always trade with breakouts and earn a full-time income by doing so. You can execute these 3 trading methods at any time frame. So, if you prefer short buy and sell positions, then you can, for example, trade on the 1-minute time frame. But if you prefer longer-term swing trade positions, then you can, for example, trade on the 4-hour time frame or the daily time frame. That's it for this video. If you found the video informative, don't forget to like and subscribe. If you want to trade along with my buy and sell positions, you can take a look at the website. I want to thank you for watching, and I look forward to seeing you again next time.